get in PN Vijay now to decode the market for us. Vijay, it's a horrible spot that the market is in, but let's discuss some good things. The sugar sector and how it's moved today. Would you incrementally expect these sugar stocks to move, or do you think most of the good news is already in the price?
Well, some big moves have taken place, but I think if you compare to the levels these stocks were, say, 3 years ago, they have been quite decimated. They are still at about 25% of what they were. So the scope up is high. I would say this decontrol is partial decontrol, in the sense that the selling side has been decontrolled in terms of the horrible quantitative mechanism, release mechanism has been removed, which means that players can plan their working capital, can plan their cash flows much better. And then the levy sugar, that small percentage it used to be there, has been removed. Government will pick up the subsidy and buy from the open market. So these are two big things. But two bigger things which have been left untouched in my view are that registered cane area has the state still have the power to notify and de-notify cane areas. And the second and the most important thing is the price that we paid to the farmers. What would happen is now we will find a big difference between different sugar units. Their capacity to hoard, if I can use that rather dirty expression, to looking for better prices, their capacity to negotiate with the state governments for better prices, the attitude of UP versus Maharashtra versus Tamil Nadu and so on. So it will be almost impossible for us to look at the sugar pack in one breath. I would say any decontrol is positive for business, and so it's positive, but I would not really go gaga about it. I would go about accumulating my sugar stocks after studying the impact on company by company.
Vijay, hi, afternoon. We are getting this news at this point in time that maybe there would be around 30 bank licenses which the RBI expects in terms of applications, and there will be strong due diligence. In your mind, which one would possibly be the most likely candidate to actually get a banking license?
Well, if you saw the track record of RBI, they gave licenses to subsidiaries of government entities, like last time they did for HDFC, ICICI and UTI Bank, which is now called Axis Bank. So there they play safe. From that point of view, I think the likes of LIC Housing should get a license. Also, since this is supposed to be a reformist measure, and it is a reformist measure, why should I be cynical about it? The likes of large NBFCs like Shriram Transport, Religare, and others, L&T, I don't know, because it belongs to an industrial group. Mahindra again belongs to an industrial group, whether that weighs against them. If the RBI takes a view that the industrial groups, big business groups should be out of it, then the likes of Shriram Transport and Religare would stand a good chance. So I think past experience in the financial sector will be a sine qua non. There would be a preference to go for government instrumentalities, and there will be a smattering of large NBFCs which know the business of lending through and through.
Vijay, did you just hear the news about the possibility that money laundering is not something the RBI found in the 3 private banks, and it was just flouting of some amount of KYC norms? Would that give you some amount of relief?
Surely relief, because money laundering by the banks is a very serious offence, because the sections under Money Laundering Act elicit criminal prosecution of the people involved. We have a very strong money laundering law in the country now. KYC is different, and the private banks would have a good case if they said the KYC, they are actually acting as brokers. It's a different matter. The private banks make most of their money doing broking and not banking. They go about, their officers go about selling insurance products and mutual fund products. But the banks will take the view we are just a broker or a distributor, if you want to call it. And the KYC is done by the eventual entity, i.e. the mutual fund and the insurance. The form that's filled up is that of a mutual fund or an insurance. Hypothetically, if ICICI Bank did the KYC, would Birla Sun Life accept that KYC? It would not, isn't it? So I think the KYC charge of RBI may also wear thin in the light of existing regulations. So I think if this was a cloud over these banks, the cloud is gone, and to that extent there should be a relief rally.
Vijay, I'm going to try and squeeze in Maruti and whether you would buy that stock now in anticipation of further weakness in the yen and the impact it would have on Maruti's margins.
Maruti is a strong buy at this levels. In fact, it stands out as perhaps the best auto stock. The reasons are twofold. The one, of course, the yen, the BOJ is doing a calculated depreciation of the yen for the last 1 month, and it just announced another fresh bout of weakening the yen to make Japanese exports more competitive, to attract investments into Japan and to really spur that moribund economy. And since Maruti invoices a lot of its imports and many of its products are really CKDs, that should have a very good impact because most of its sales is in Indian rupees and US dollars. The second is, generally if you saw the last month's sales, Maruti is about the only company that's bucking the trend. And if you took the view that Maruti is about the only listed company whose fortunes swing with consumption in the economy and the others swing more with investment, industrial production and agriculture in the economy, this again leads one to the conclusion Maruti is a strong buy. Of course, the management is good, etc. So Maruti at about 1400 or 1410 level is quite a strong buy in my view.
Vijay, I'm just going to ask you one last call on the markets itself. Do you expect to see any kind of support at these levels of around 5500, or do you think that because of the complete apathy in terms of buying, this market might sort of see a slow and steady grind to perhaps even the September lows?
Well, markets have a way of surprising all of us, when every analyst is shouting sell and reduce positions, that's when the market takes off. It's done that too often in the past for me to fall to that trap. I would say that the market somewhere around its lows, and probably the next quarter results are very important. If we get decent results from private sector banks especially, I'll single them out, then the markets may rally. I have not suddenly turned bearish compared to bullish from the last 10 days. I'm still very confident that we would stick to that 15% growth in the Indian stock market in the next 12 months. And I think the next big trigger would be the fourth quarter results.
Okay, that kickstarts next week with the emphasis next Friday. So let's see what this one delivers.
But Vijay, what is your expectation in terms of data points next week, and which one do you think would be the most important that the markets could react to?
Well, the IIP will not be much of a surprise because the core sector has already shown us that it's going to be quite bad. The CAD would be interesting because the CAD really deteriorated to 6.9%, which is, I think, a historic low for India's current account deficit. Whether there is an improvement in the CAD and what's the annual figure of CAD is very important, because there is a strong linkage between CAD and the currency and the fiscal deficit and really the stock market. So that's the figure we'll watch. And of course, on the micro market, Infosys is significant because Infosys has apart from being a company by itself, it sets the trend for the IT and also sets the mood and sentiment for the rest of the market for at least next 15 days. So in order of priority, I'd put CAD the most important, followed by Infosys, and then some passing interest in the IIP data.